Except for Volcker, the Fed has always been a lagging indicator. They don't actually set policy the way everybody believes. They react to the economy.
Although they've also been the thing that has killed a lot of markets, has brought on bear markets because they move too far.
But they go too far. Agreed. They go too far in every single cycle. But the reason they go too far is that they're following lagging indicators like inflation, and the front end of the economy is already slowing down. And that's the end of a cycle.
So they say they're data dependent, but you say the data stinks because it's
No, they are data dependent, but what does data dependent mean?
Right, but
data dependent means you're a lagging indicator.
But that's just it. If you are following information that is outdated, how strong can you be?
Right, and that's
so the
that's
Fed by raising rates,
Richard,
in 2005, 6, and 7. Caused the downturn because it raised rates too much.
No, I didn't say that's what happened.
Well, that's sort of what you said.
Well, what I said was
preposterous as saying the Fed orchestrated the two longest recoveries or the two longest expansions.
No. But what
I was just asking you to be consistent, Joe.
No, what I said was...
we know what orchestrates it. It's the American exceptional.
It's cable television.
It's American exceptional.
If I can interject here.
American exceptionalism. Yes, is what does it.
The problem with that the Fed has, the challenge, and the reason that the Fed typically overdoes it, is that there's an 18-month lag between changes in monetary policy and its full impact on the economy. But as Richard said, they're reacting to today's news. They should be thinking about they've got 18 months of tightening in the pipeline. So they eventually will probably go too far, but that may not really hit the market and the economy for another year or two, maybe even 3.
I don't think it's our dynamic economy and our the way that
I think that if you didn't have QE 1, 2, 3, and 4, I'm not sure exactly where things would land right this second.
You think it's the Fed?
I think that there was a huge. I think that the
Fed needs
crisis
the Fed's mandate is price stability and jobs.
It doesn't have to be either or. You have a central bank that guides the economy back towards what are perceived to be, neutral rates.
All good things flow from the government.
No, I'm not saying that. And you have an incredibly dynamic economy. That dynamic economy created a massive meltdown in 07 and 08. That might have been assisted by the Fed. I'm not sure.
Can I get back to Rick for just a moment? Rick, let's talk just again about the reaction we're seeing in the markets, and we'll stick with equities first of all. Dow futures now up by 180 points. We had been up by 340 points or so earlier this morning until Eamon Javers came on and said that the report that the president had ordered his staff to come up with some sort of a trade pact we could potentially work out with China was not true. We saw the futures come down to up about 210. Then we got the numbers from the jobs report, better than expected jobs, but also hotter than expected wage growth. And that has taken us down to up about a 175. What do you think of these two issues that are overhanging the market? What's the reaction there that you're hearing on the floor?
Listen, my litmus test, Becky, is always the same. If there's news and we never know how tightly we could tag the news to market movement, I always assume that the news didn't exist. Is there anomalies that seem to jump out at me that wouldn't have existed? Yes, to some extent, yesterday's bounce coordinated with the timing. But I think today's dripping away, and the very notion, I think the China news yesterday actually is more of a dollar-related event. The dollar really got whacked yesterday. Yeah. And I think if you've watched the accumulation of the dollar against the Chinese yuan and tried to calibrate that with what's going on with tariffs, that all seems to make sense. If you're a dollar bull, the last thing you want is a shaking of hands between Xi and Trump, because that's going to hurt your position for a while. Right. All that being said, interest rates have firmed. They're not much higher than they were before the data, but they've firmed. And remember, they have been firming. We are right now 1 basis point away from 4-year cycle highs on 30-year bonds on a closing basis. We're 6 basis points away on 10-year notes. We're, 3 basis points away on 2-year notes. So that complex is firm. The equities, they're going to have to deal with 3.1. And listen, I understand the logic of higher rates actually being good if it's for the right reasons. Sure. But nobody really knows if it's for the right reasons. And I think at the end of the day, after the volatility we've seen going in front of a weekend, stock investors are going to be a little bit nervous about rising wages.
Hey, Rick, do you think we could have a 50-year boom if we just did QE infinity? I don't know why we just don't do that. You know what I mean?
We kind of are.
You know what, Joe? Joe, you and I are about the same age. You know, if we didn't care about everybody else in the world, sure, let's do that. It'll take you maybe farther than people think, but in the end, there is going to be a reckoning. And everybody could whine about the Fed and whine about Jay Powell, but Whether he's gone too far or too fast, at least he's going in the right direction. The rest of the world will suffer setbacks that the U.S. won't because we're discovering religion. If there was a recession next month, what are Japan and Europe going to do to contend with it? Go further into negative territory with rates? Oh, yes, the banking system, the transmission to the economy would just love that, wouldn't it? I think everything is fine considering that central banks have put us in orbit and they don't have a computer for reentry. I think things are looking pretty good.
Well, all right, Aaron, is that Aaron or Michael?
Yeah, no, it's Aaron. I want to make 2 points on the Fed. The first is I am concerned that they're overshooting, but the Fed did something very important this week that's going to have a big impact, which is it loosened bank capital rules, which is going to potentially accelerate and put fuel into the economy. So everybody thinks of the Fed as just having this one monetary policy level, but their bank capital and their capital regulatory situation also has a big impact here. So the Fed is tapping the brakes on monetary policy and pushing the gas on bank regulatory policy. And whereas Joe and Rick, I sometimes agree with you on some of your points about the Fed here, this generation is acting like it doesn't care about the future with these huge trillion-dollar Trump deficits, which will cause a day of reckoning.
All right, Michael, I'll give you a last very quick word.
Experience with deficits since 2008.
I know.
Look at 09, 10, 11, and 12.
Those were good ones.
Yes.
When we were putting the economy back on track.
On which ones are good? Yeah.
What did we get for it? That's the only problem. We got 1.9%.
There's a huge difference, Joe.
Growth.
A huge difference to a series of government spending when the economy is falling at a 4% rate than when it's growing at potential.
I can do 3 quick points. One of them Liesman might not like. I agree that deficits are a problem. The Trump tax cuts added to them. The real driver of deficits is entitlement spending on middle-class seniors. Got to get that taken care of. The Trump deficits pale in comparison to the threat that poses to the economy. 2, the Fed is right to be increasing rates. The Fed should think about the pace at which it increases them. I'm a little skittish about a rate increase in December. All the good news we see today suggests that we might want to let the economy run a little hotter for a little longer. But certainly rates should be higher 9 months from now, a year from now than they are today. And 3, if you look at the 6-month average of job gains and compare that to the average over the last 5 years, what you see is that we are still in the middle of this cycle. We haven't entered the late cycle, and that's a pretty remarkable thing.